A question we get asked frequently is, how do the ultra-wealthy invest? One thing that everyone can agree on is that the investment landscape has changed. According to research from Callan Associates, investors need to take approximately 6 times more risk to achieve the same return that a 100% investment in cash and bonds generated 30 years ago. Institutional and ultra-high net worth clients realize this and may invest in alternatives to complement traditional investment strategies such as stocks, bonds, mutual funds, and ETFs. Even the Canada Pension Plan invests over 50% of its assets in alternatives. One type of alternative is known as structured products, and although it is created by Canada's big banks, it's only available through brokerage channels. This investment solution can provide some known objectives, such as creating a barrier of protection against principal loss and achieving returns or income in sideways and down markets. Constructing a portfolio without alternatives is like driving without airbags and a seatbelt. To find out more about alternatives, call us today.